10-year note yields moving lower midweek, getting down all the way to 312, seeing a range of 312 to 328, ending the session very close to those lows we put in. Taking a step back, it's a big move Treasury yields have seen since the post-FOMC trade of last Wednesday, where we got very close to 350, so about a 35 basis point decline since after FOMC. So a big move lower today, prompted a lot by what the Fed chair had to say. The Fed chair talked about seeing the economy sustaining these rate hikes and not seeing a slowdown in the broader economy. However, he does see things getting a little bit bumpy, and the potential for a soft landing seems to be declining. Ultimately, at this point, the Fed's going to stand by and fight inflation by raising rates. They're also going to attempt to normalize policy while shrinking their balance sheet. All of this should be driving Treasury yields higher. Ultimately, it is not. So there's some disconnect between what the Fed chair is saying and what the Fed is doing and how the markets are reacting. We'll have to wait and see how this plays out as more data comes in. Now, what does this all mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice that volatility, well, it continues to mirror yields. So as yields move up, we see volatility moving higher, as we did over the last day and a half. Today, however, we saw yields moving much lower and we saw volatility moving much lower. A lot of that has to do with direction of the yields, also has to do with the fact that we came to an event like the semi-annual testimony to Congress and we got through day one and we have day two tomorrow, but much of that will be a repeat of what we saw today. Lastly, what do we have tomorrow? Well, we have the claims number, which is our in-the-moment look at the job market. Claims have been a little bit sticky high here for the Fed, north of that 200,000 filing mark. That is expected again tomorrow. Likewise, we get some manufacturing data. Manufacturing has been a sore spot, has been weaker than expected. Likewise, we do get day two of the Fed chair's testimony to the House panel today. He spoke to the Senate. The only change we may see is in the Q&A, so keep an eye on that. The testimony itself will likely be very similar, and the Q&A obviously will be different with different people asking questions. So midweek, we see 10-year note yields moving lower, well off those highs we saw post-FOMC, ahead of day two of the Fed chair's testimony to the House panel.